So thank you so much for joining us for another session of Shane's Scoop. Today we are interviewing Carlie Scharing with Means Financial and Insurance Services. She is the Senior Client Advisor, and so glad to have you on today and answer some of the questions that we're getting from our clients all the time. Tell us a little bit about yourself.
Yeah, thank you for having me on. My name is Carlie, just like you said, and I'm the Senior Client Advisor, and I'm a junior partner here at Means Financial and Insurance Services. I've been with the company for just about 3 years. Took a turn in my career when I jumped over here, but I love it. I've really picked it up, and I have a passion to make sure that homeowners in our jurisdictions are covered.
Great. Well, thanks again for taking some of our questions. So one of the things that I'm seeing all over the news, I know clients are worried about and hearing about is, the fact that so many insurance companies are leaving the California market. Give us a little background as to why that's happening and what impact that's having.
Yeah, it's definitely had a big impact on the markets in California. Companies are pulling out. I like to call it like a peaceful protest, essentially. California, obviously the government is not working to help clear brush, or whether it's they're not helping to find a solution for these companies. And so the companies are leaving because it's just not worth the losses on their end to be covering high risk homes here in California. Some companies were taking everything and anything for a while, and I think they just kind of hit capacity on what they could realistically take into their markets. And we're seeing more and more companies kind of back out of California just because of the difficulty that it already is imposing on them. But I don't see that as a forever thing.
Okay. Well, that's good news. What about, I hear a lot of times about the reinsurance market and how that has an impact on some of these companies. Tell me a little bit about, because I'm sure most people don't even know what reinsurance is.
Yeah, so reinsurance, essentially whatever company you are with for your homeowner's insurance, they also have a giant insurance company that helps make up their costs. So if you have a loss as a homeowner, say you're with State Farm is not necessarily the first, they're not the only company who takes the hit or helps pay out. They basically have a higher up company that helps make the payout for them. And so that's the reinsurance company. And that, just like with any other system, it's starting from the top down. And so the reinsurance companies are seeing major losses as well.
Okay. And what are some of the, I guess, most common companies that we know of, we've heard of, that have left the California market?
Yeah, the 5 big ones that come to mind are State Farm. They were the most recent to jump out of the housing market. Allstate, Farmers, Geico, and Nationwide. So those are 5 pretty prominent companies. You definitely don't see as many commercials anymore. And so they have stepped out of the California market, some fully, some partially.
Okay. And what does that mean for clients of mine or for you who already have some of these companies for their coverage? Does that mean that they've lost their coverage, or what does that mean for them?
In most cases, a lot of people are grandfathered in, depending on the risk that the company took. Like State Farm did take a lot of high risk cases, especially for homeowners insurance in high brush areas. So it just kind of depends on what they're marketing and, again, what their reinsurance companies want to do for keeping the business. As of right now, you cannot get a homeowner's policy with State Farm, or I believe the other companies. However, if you already had a policy with them, you are grandfathered in until further notice, essentially. So I would say as long as they're offering renewal, you've got a policy. If they send out what's called a non-renewal or a cancellation, they give you ample notice so that you can take it to market and make sure that you have no lapse in coverage.
So we know that insurance premiums have already been going up in California. I'm sure we all see that with our policies. Every year it's time to renew.
Yeah.
How is this going to impact the cost side of things? What are we seeing as far as trends with the cost? And are there any new companies that are coming into the market to replace some of the ones that are there?
Yeah. The cost, unfortunately, it's going up just like with everything in our economy. I mean, a gallon of milk has gone up, a carton of eggs has gone up. So insurance is no different. We're unfortunately not in 2020 prices when the cost of insurance was down because of that market. We are now in a market where the insurance is no different than any other product out there. So it's something to consider for everyone, for someone buying a home, for someone refinancing, or for someone who needs to be looking at their insurance. There's always room to shop your insurance, but at the end of the day, if you have a policy, I recommend staying where you are. In the future, we haven't seen any companies that have come in and stayed. We've seen companies that come in, they offer, a neighborhood up their policies, and then within the first year, they've already non-renewed the policy. So as of right now, I haven't seen any strong new Titan companies coming in to start really taking over the insurance markets like the current standing ones.
Okay. So are you saying that if you're seeing some premium increases on your policy, that it wouldn't be a good idea to shop to see if you can get a cheaper price, that you should just stick with the company that you have right now?
You definitely have the right, and I would say you should shop it. There's always a market to shop it for. However, it's just not as easy to be like, oh my gosh, yeah, let's just jump ship, So in some cases, especially if you're in a high fire area, that's the biggest concern. So if you're in Scripps Ranch, for example, and your premium is really high, you can shop it, but I would say just be wary that like you probably don't have a lot of options.
Okay. Well, what can a homeowner do to be a little more proactive to make sure that their policy doesn't get canceled, or to make sure that their premiums aren't going up as much? Or if they're looking to buy a new home, be a little more proactive to make sure that they can get a policy?
Yeah, so I'll start with the easy side of that. So as you're shopping a home, you can use your current agent, or you can use a broker like me to start shopping for homes. We've had a couple clients in the past who moved here from like Virginia, for example. They worked with a real estate agent out here. The real estate agent was connected with our agency, and so they referred them over. And she was like, "Hey, can you send me the insurance quote for this property?" And it wasn't within their budget, so they didn't buy the house, honestly. And so they kept shopping the homes compared to like what they like and what they wanted in California real estate, and then they cross compared that to what the insurance costs were going to be, and that was part of the reason how they made their decision on their home. On the other hand, if you are gung-ho and totally set on a home and you don't really care what the insurance is, you're going to have insurance. It might come at a cost. So that's the easiest answer right there. And then let's see, to prevent non-renewals, the easiest way to prevent a non-renewal that's in your control is to not file claims for the little things. If you've got a pipe break and it flooded like a small part of your bathroom or your kitchen, I would say I can't necessarily say don't use insurance, but really consider the cost of using insurance after your deductible. Like if, say you've got a homeowner with a deductible of $2,500, the job to fix it is $2,700. Insurance is going to pay out $200, and that's going to ding you for upwards of 7 years. Whereas if you bit the bullet, you paid out the full $2,700. It's a frustration in the moment, but long term, it doesn't show up on a history, essentially. Some other things is it's a communal effort of making sure your like your neighborhood, like your home is cleaned up. Like if you've got trees overhanging your roof, it just makes things a little more difficult. So make sure that your property is in good standing. Everyone can do their part as homeowners, as property owners, to be taking care of their property so that it essentially looks good. That does go into insurance effects, because they're constantly doing like sky reports, and that, like, as simple as removing tree branches from your home roof. Bigger upgrades might be like taking a look at the plumbing or the electricity or the HVAC systems in your home. Like take a survey of the last time it was, either surveyed by a contractor or even fully updated, especially the roof. The roof is the biggest one that we're seeing. We've had some homeowners who have either been really proactive and been like, you know what, yeah, it is time to replace the roof on this property, or they're like, well, I'm not replacing a roof, so figure it out. And it just makes things really difficult. Like, a lot of the insurance companies have the same back end reports of, your roof is 30 years old and it's not a tile roof. Like, you need to update your roof a little bit, because an older roof means a higher likeliness of a claim. So there's a lot of things you can do. I would certainly recommend talking to your agent or your broker to see what kind of things they would recommend. And then even more proactive is in the search for real estate. If you are a buyer, try to get as much documentation as possible from the seller that you're buying the home from. Like, again, going back to the roof replacement, HVAC, plumbing, if the homeowner can offer those documents, it goes a long way for insurance, because those are documents that underwriters are requesting for these days.
And you hit on this already a little bit about, when to submit a claim or not to submit a claim. And I think that's a big thing. When people think, oh, I've been paying for my insurance this whole time, I'm going to submit a claim because I don't want to pay it out of pocket. But go into a little more detail as far as what type of impact that can have on a policy, how long that will affect the policy, and also talk a little bit, because I had this happen a lot of times where new clients are looking to get a policy on a home, and that home has had a couple of claims against it, and now all of a sudden the buyer can't get insurance or can't get it at a decent premium because that home has had a claim. So you may even be affecting it when you're trying to sell your house the next time around.
Yeah, those are great points. So, some carriers, it's really interesting. Some of the carriers I work with don't want to insure the structure of the home because it's had losses, and some carriers don't want to insure the homeowner because they've had losses on prior or current homes. So yeah, like, when you file a claim, it definitely not only affects you, it can affect the buyer of your home as well. And so, unfortunately, a big part of it is the marketing on TV. I don't know if you've ever seen the commercial where they're like, oh, did your TV break? You can use your home insurance to cover that. Like, go buy a $400 TV from Best Buy, honestly. Like, there's no need for you to use your homeowner's insurance to replace your phone, to replace a cracked screen of some sort. And I've had not clients, but I've seen people do that. And so
I didn't even know you could do that.
Yeah. I've actually seen a couple commercials who propose that, and it drives me nuts, because it leads to the further uneducation of homeowners and clients being like, well, I thought I could, so I don't understand. Right. Basically that's what phone insurance is for. You can cover your phone with the insurance protection program through your carrier. Use that. Do not use your homeowner's insurance. And let's see, getting back to your question. When it comes to claims, I would say really have a conversation with your agent or broker. I cannot tell you to not file a claim. I can tell you to think about it, basically. And I can basically advise you on what it will do in the future. Like, claims are sticking for up to 7 years now. It's no longer just a couple years. It is sticking for 5 years, or 5 to 7 years. And again, sometimes it's sticking with the property, which to me makes more sense, because it shows that a home might not be structurally sound. Something is really wrong with the old pipes or the roof, or something really needs to be looked at. On the other hand, it also makes sense if someone's carrying a long history of claim after claim after claim.
And tell me, so obviously the benefit of working with someone like you is that they can call and get questions answered, and they're not talking to the actual insurance company. Whereas if they were to call, let's say they had a farmer's policy and they were to call farmers and talk to their rep, all of those notes go into the system as to what they're talking about. And even if they don't file a claim, I've heard that that's still now in the history of the property and can be an issue going forward.
So essentially I'm a middleman, and sometimes middlemen are great, sometimes they're frustrating. I would say for the case of insurance, it's a good place to have a middleman because yeah, if you call into Farmers or State Farm directly, you might have an agent working for you, but they're also working directly for the company they work with. They might be taking notes. They might be, it might be swaying them a little bit, essentially. If you work with me, I don't care if you're a client or a prospective client. I'm happy to educate you, give you some advice within my jurisdiction and within my means, in order to make sure that you have the best answer and education on how to go about, your homeowner's insurance, filing a claim, how to best take care of you and your family for your insurance needs.
And so a lot of what we're hearing out there when clients can't get insurance, a difficult property to insure, is we hear about the California Fair Plan. Tell us a little bit, what is that? How does it work? And what's the cost involved?
Yeah. So we are fortunate in California. It's not possible to not have home insurance. California Fair Plan is the option when no one else is taking your property, mostly due to fire hazards, also prior claim history. So the California Fair Plan is actually reinsured. So going back to the reinsurance companies, the higher ups who also insure the insurance companies, it's actually reinsured by all the other California insurance companies. So Travelers, Mercury, State Farm, Farmers, Geico, they actually all pay a percentage into the California Fair Plan because they are unwilling to take the risk, and they recognize that the California Fair Plan is willing to take the risk. So unless the home is on fire already, you can definitely get a policy with the California Fair Plan. It does come at a cost. They do offer high deductibles, and if you were to work it with my agency, like, we really make sure that we're making it compatible to the needs of your home and also find a budget for you. So the California Fair Plan is no respecter of persons. Every single agent can copy the exact same quotation numbers that if we all did the same ones. So it's not a respecter. We can all come up with the same values. However, my agency, we fully find it important to be covering the actual structure of your home. Like, your items will cover, they can, but at the end of the day, like, little things can be replaced. When it comes to your home, home prices are going up. We want to make sure that we're covering the structure of the home. And so we do usually go higher, and we explain why we're going higher, because it's a high value asset. We want to make sure that in the case of a fire, your home is replaced and not sitting after a decade unbuilt because the insurance didn't cover it properly ahead of time.
And how do you come up with that replacement cost? What factors go into considering that?
Yeah, so current market value conditions, I would say for anywhere between like a tract home to slightly upgraded, we go anywhere from $300 to $350 per square foot. That's our base. If you're in a brand new home, if you're in a home with like granite countertops, marble flooring, somewhere like just a larger home, La Jolla, Rancho Santa Fe, we usually go higher, about at least $400 per square foot, just to make sure that we're accounting for the nature of how upgraded your home is. And that's just based on the current market value conditions of structural and physical costs. Obviously, there is a difference between what the house or what it would cost to rebuild the house compared to what the value of your home is, because the land carries some value. Right. So we do make sure to go at least, like, bare minimum in my agency is $300 per square foot. And then we go anywhere between like $300 to $350 to start. And then we always include the extended dwelling replacement on policies, which is anywhere from 25 to 200 or 25 to 100% additional.
And so when we're doing loans, we know that the lender is going to require there to be an insurance policy on the property. And every so often, when the client doesn't have a policy or something comes up where it's not getting renewed, we'll hear that the ultimate lender who's servicing it requires and gives them an option for insurance that they provide. Tell us a little bit about that situation, and would a client want to go with that insurance or not go with it?
Yeah. I would say 99% of the time, I would not recommend lender-placed insurance. They might cover the structure of the home without without replacement cost, without extended replacement cost. They will probably barely cover your belongings, barely cover you to rent elsewhere if you are put out of the home due to a disaster. And then on top of the actual structure, they usually go really, really low on the liability insurance, which in California is the next most important thing to having the actual structure covered. So, I mean, again, it does come back to what you and your family can afford for insurance. So I would say do your best to find any sort of budgeting available for insurance before going lender placed.
And tell me, I mean, typically, what does a homeowner's policy cover? What does it cover? What does it not cover that, people might be surprised to know that it doesn't cover?
Yeah, great question. So we do get this question more often than you'd think, especially starting about right now as the temperatures climb, and fire season is already starting. So as soon as fire season hits, we get clients asking, does my home insurance cover for fire? Yes, it does. Yes, it does. Yes, it does. So a standard homeowner's insurance policy covers your home for fire, smoke, wind, hail, internal explosion, vandalism, theft, water losses, and liability losses. So that's a full standard policy. If you are moving to the FAIR plan, if your home has to be on the FAIR plan, you would have two separate policies. So the FAIR plan covers you for part of it, which is fire, smoke, internal explosion, wind, hail, and vandalism. And then you would get what's called a difference in conditions policy, or a DIC, a wrap policy, second coverage. There's a lot of different names for it, but that one primarily covers you for water losses, theft, and liability. So some people have chosen to do partial coverage just based on what their needs are and what they're most concerned about. But in general, you've got like the fire, or the California FAIR plan covers you primarily for fire, which is our biggest natural disaster peril out here in California. And then a DIC covers your home for water losses, which is important, and also liability coverage, which is huge.
And when you say water losses, what does that refer to? What about floods, or where we had all of the the recent rainstorms, and if there was flash flooding and things like that? Is that covered, or is that a separate policy?
Great question. So yes, the only two perils not covered on a standard homeowner's insurance policy, whether it's one full policy or two separate policies, is earth movement, which is an earthquake, mudslide, landslide, or flooding. So those are two supplementary policies. They are not required by your mortgage company in most cases. There are specific zip codes down in San Diego near the waterfronts that may have flood insurance required, but in most of California, it is not required. So the water coverages that are covered by a standard home policy, or even that DIC policy, are like pipe breaks. Let's see, rain would be covered, but I tell clients all the time, I'm like, unless your home floats away to like as though it's in Noah's Ark, and you're not in a flood zone coverage, your home's going to be covered for the water damage.
Okay. And the earthquake policies seem that the premiums seem to have come down quite a bit on those. So would you recommend that people get those policies?
The premium is relative. Like earthquake companies keep them relative because the deductible is higher. So on a standard home insurance policy, you're going to see a deductible of anywhere. The lowest is like 2%, and then it goes up to almost 50% of the actual dwelling. So if your home is covered for $1.5 million, I would say most people go with like a 10% deductible. So you're going to pay out $150,000 for your home to be recovered after an earthquake. We do have a couple fault lines here in San Diego. We have the Rose Canyon fault line, and what's the other one? It's like it's like Escondido, more northeast. I'm blanking on it right now, but we do have two major fault lines. The Rose Canyon fault line is actually down in South San Diego, like Pacific Beach, OB, down in that area. So I actually do recommend earthquake insurance, especially for them. I would say about 50% of our clients have the earthquake coverage. Some people are just like, you know what, I'm not really concerned. That's another place I educate my clients and let them have the ultimate final decision on it, because it is supplementary. It's not required by mortgage companies or lenders when you're in escrow on a home. But the most important thing to consider is if we do have a major earthquake and your home is red tagged, your standard home insurance policy will not come in to save the day. They will not come in. So if your home is red tagged and you're put out, costs are going to be on your own at that point.
And that comes into another thing that's been in the news an awful lot is up north. I don't remember the exact location, but those homes that were on the hillside, and the hillside started to crumble underneath them, and the houses were going over the side and being completely destroyed. That's not covered under normal policy, and would that be covered under an earthquake policy though?
Yeah, under an earthquake policy, because it would be considered earth movement. So at the end of the day, claims will have the final decision. I mean, basically that was an act of God and the earth physically moved. So yes, that would be covered with an earthquake policy. But no, like I said, if those homeowners decline to have earthquake coverage and those homes are red tagged, destroyed, no one's coming in to save the day, unless they had earthquake coverage.
Do you feel like the insurance market is going to turn around here in California, where we're going to see, again, more companies coming in, lower premiums, easier underwriting?
I'm hopeful, and I do think that they're going to turn around. Like, I'm relatively new in the business. My business partners have been here, 15 years, 40 years, and they've never seen the market like this. But at the end of the day, things do turn around. So we're all optimistic and hopeful that things will start to turn around. It probably won't be by the end of the year. We're looking more towards 2024, anywhere starting in 2024. So it just depends on the world and the economics around us, essentially. Like I said, insurance is not it's not out of the question when it comes to inflation and the rising cost of everything. So it's kind of as soon as we see markets softening, I do believe that the insurance market will start to soften. I really do hope that more companies come back, because even though most of the companies that left are ones that I don't work with, they're my competitors. On one hand, it makes it nice because more business is coming in, but on the other hand, it does make my underwriters pull their horns in as well. And they're a little shy on the business as well. So I do hope that the competition comes back in, just because it makes for better business. And it makes for happier homeowners, happier Californians. So I'm hopeful. I just don't have a crystal ball as to when it'll be.
And how do you know if you've got enough coverage? If there's enough coverage on the type of insurance you have? Is that something that you'll review with clients if they have questions?
Yeah, that's a great question. So like I said in a previous question, it doesn't matter if you're already my client or if you're prospective or just kind of shopping around. I'm happy to do a full comprehensive review to make sure that you have the coverage. The primary things I look at are the actual dwelling. So that's coverage A on your homeowner's insurance policy. I want to make sure that your home is covered properly. If you're underinsured badly, and if I can shop it, great. Otherwise, I'm going to advise you to go back to your agent and request it to be higher. There's no reason to have an underinsured home with the rising cost of everything and just the value of our homes out here. And then the second most important thing is the liability, as I mentioned. If your agent is putting less than $300,000 in liability on your homeowner's insurance policy, they're just doing a disservice. And unless you asked for low liability, which it's pennies on the dollar to increase, I really do believe that it should be at least 300,000. So going back, that's why I wouldn't recommend lender-placed coverage, is because they'll only offer $100,000 in liability, which unfortunately in California, that's not going to get you very far. It doesn't matter if someone comes onto your property uninvited or not, they get hurt, they sue you, and if you have $100,000 to cover you, it's not going to get you very far.
Well, we've already heard some of the benefits of obviously working with someone like yourself, a mortgage broker. What are some of the other benefits of working with I'm sorry, not a mortgage broker, an insurance broker? What's some of the other benefits of working with an insurance broker?
Yeah, so I mean, the most important thing is that I work for you. I work for the client. I don't care which company I'm working with or put your coverage with. I make sure that you as the client are happy. So I'm not married to any one company that I work with in my agency. I like, you are my boss essentially. So you as the client, as the prospective client, you get to tell me like what you're looking for, how I can best help you. And so that's what I love to tell people is I'm working for you. Like, let's make sure that we're not just I totally blanked, but like I'm not working for the company. I want to work for you and make sure that you're covered. So I want to do a full service review for you, make sure that you're covered on your policy, whether it's in my agency or not. And again, I shop the markets. So I shop the markets. If you're on the fair plan, I basically tell you that you're a VIP in my house. And so I do quarterly reviews, or I do reviews as often as I see the markets changing. So if I see my underwriters start to take more risky business, then I start really shopping my fair plan clients. I've actually had a success story of getting someone off the fair plan and onto a standard policy. So I'm holding that as my trophy, and I'm going to continue to work for that and for my clients to make sure that we have happy clients.
Nice. Well, how would someone get in touch with you, Carlie?
Yeah, definitely. Easiest way is by my phone. So it's just a direct phone. It's 858-727-9076. The other way is email, which is carlie@meansfinancial.com. If you want to just shoot me over your policies, let's start taking a look at them and see how we can help you.
Okay. Well, if there are any other questions, you can also comment below and let us know, and I'll make sure to share those with Carlie. Thank you so much, Carlie, for coming on today and answering all the questions. Really helps us out. And please stay tuned to the next episode of Shane's Scoop. We're going to continue to have some other great professionals on, sharing information to educate you and help you out to be as successful as you can be. Our main goal is to have successful homeowners. So we are happy to bring this information to you. If there's any topic that you want us to cover, let us know and we'll find a professional to talk about it. Thank you so much.
Thank you.